Now that you understand that trading is just a game based on manipulated emotions, you can use the geometric trading model. Now, the geometric trading model maps out the emotional patterns for all these instruments, and you can use this to extract wealth from the system and acquire tangible assets that have real value. And this is the same methodology that was used to also extract value from this continent. So before you get into trading, you need to understand what money is, because the objective of trading is to make money. So we're going to look at the origins of money. Where did money come from? The whole idea of money. So back in the day, traders within Africa would trade, barter trading, exchange goods and all that stuff. But then we got people from outside of Africa who didn't have anything to offer that was useful for them. So they invented this concept of money as a means of exchange. To say, okay, I'll give you this money and then you can give me your natural resources. You know, and this is how these nations outside of Africa got to accumulate the wealth that they got to accumulate through the introduction of money, the concept of money to take goods and then exchange for that. So that's where this money idea came from. So money was originally designed to solve the problem of trading for those that didn't have goods. They wanted to acquire goods, but they didn't have goods to exchange. So money in its original form was in the form of gold, you know, and then after that it has transitioned from being backed by gold into fiat currency, which is what we have now. It's not backed by anything but just based on trust. Now, this money, since it's no longer based on anything solid, there are all sorts of terms that have been introduced into the equation. Things like inflation, which is the time value of money. You know, after some period of time, your money loses value. You know, and all these strange concepts. And also now, because we're now dealing with money, we have now introduced things like interest rates, that is supposed to be somehow to measure a form of risk, you know. So these are all concepts that have come around by having money in the equation. So let's look at examples of currencies, money. We've got the US dollar. What gives the US dollar value? So the US dollar, what gives it value in our current system is just based on belief, trust, to say that, you know, this US dollar can be used anywhere in the world, and if I can have a US dollar, I can buy anything, or I can even exchange that US dollar for any other currency. So it's just based on belief, but not on fundamentals to say, what is this backed on? Trading is buying and selling in its simplest form. That's all it is. And now we are looking at buying and selling within the financial markets. And these instruments that we're buying and selling, they are always changing every day. So the idea, we want to buy them high and sell them low. Now, when you look at the prices of these instruments that we're trading, they are always going up and down, driven by emotions. When bad news comes up on a certain stock or commodity, the price goes down, and when optimistic news comes up, the price goes down. So it's all about emotions. So news flow, depending on what news it is, it can be used to suppress the price of something, or it can be used to elevate the price of something. So it's just a game. It's not based on fundamentals. Because even if you look at, like if you're trading stocks, for example, and you're trading ShopRite, if you look at the price of ShopRite over the past 3 months, the price has gone up and down. But in terms of value with the actual shop itself, has it changed? No, it hasn't changed. It's still the same. So the emotions drive the prices up and down. So it's a game. So what we need to do is be able to get into this game and extract money out of it. So I've developed a model that maps out these emotional patterns within these instruments, whether it's commodities, currencies, stocks, bonds. And this maps out the emotional patterns, so you'll now be able to position yourself such that you can also benefit from these emotional patterns. So all systems that we create, like the stock market, anything that we create in this world, is all bound by natural law. And this is how, so no matter what's happening, if you apply natural law, then you'll be able to decipher, to find out what is actually going on. So with the geometric trading model, we use natural law to decipher the emotional patterns that are happening within the stock markets or trading. Now that you understand that trading is just a game based on manipulated emotions, you can use the geometric trading model. Now the geometric trading model maps out the emotional patterns for all these instruments, and you can use this to extract wealth from the system and acquire tangible assets that have real value. And this is the same methodology that was used to also extract value from this continent. So the geometric trading model I developed in 2019 back then, and it just reminded me of an interview I once attended with Barclays when I was still in England for their commodities department. And the solutions that they were looking for are exactly what this model brings, because they were looking at price trends to say, okay, so this is the price trend, when does it change? You know, because they were trading commodities, and now I see that, oh, you know, like this model that I've created, I could have actually used it then. You know, so it gives me confidence to say that, oh, okay, so this is what I've created, but it's actually solving real life problems, because that was an issue for them. How do you accurately determine the points of inflection, the turning points for any of these commodities, whether it's nickel or whatever, because that's the game. You know, for them trading, you buy high and you sell low. So you need to determine the turning points. And so that question rang in my mind and say, okay, so this is actually solving this problem, you know, so yeah.